See you again.
Good to see you again. Thank you for joining us. For everyone on the call, our apologies for being a little late. We had a little technical snafu that we've now fixed. Thanks for your patience, Mahjong. And thank you for joining us from Beijing in the evening to take time out of your no doubt precious downtime.
It's like 9 p.m. What time is your time?
Here it's 2 p.m. in London, 3 p.m. Europe.
Okay, not too bad.
But we do have people coming in from all around the world. So there are people from the US, people from Asia. So it's all over in this call. We have a couple of hundred people lined up. So thanks for joining us. The purpose of this particular webinar, which is a broad series that Climate Bonds is running, is to look at ideas for the future, ideas for sustainable finance. And this is a conversation you and I have been having for some years, as when we've been able to work together. And I want to talk about your reflections on what's happening now in sustainable finance and green finance and what the future looks like. I've got a few questions for everyone on the call. This will be the first of a series of webinars we'll be running. Next week, Nick Robbins from the London School of Economics and Helena Viñez Fiesta from BNP Paribas Asset Management will join me for a conversation on taxonomy next for the sustainable finance revolution. And we'll announce these in a weekly fashion. Every week, there'll be a new webinar. Dr. Mahjong, our guest today, is the director of the Center for Finance and Development at Tsinghua University, and perhaps best known for his role as chair of the Green Finance Committee of China, or the China Society for Banking and Finance, to be precise. He's got many hats though. He's also chair of the Hong Kong Green Finance Association. He's the advisor to the governor of the People's Bank of China. He's the vice president of the China International Economics Relations Association, and so on. And just in terms, if you don't mind me talking about history, you did a stint at the PBOC, the People's Bank of China Research Bureau, as chief economist, and that's where you and I met when you started this Green Finance Task Force and kindly invited me to participate in that process. And what an amazing success that has been in terms of initiating ideas and projects in China, we have to say. But you've also done a stint in the private sector as chief economist for Greater China for Deutsche Bank for quite some years. And before that, World Bank, IMF, and a stint in the State Council. So you've done quite a lot of things, Mahjong, given you only look about 35. It's an impressive history. But of course, now you're doing something on a gargantuan scale, which is you're looking at the architecture of green finance, sustainable finance, on a national and global level. You helped get going. You co-chaired the G20 Green Finance Study Group, which has been incredibly influential over the years, and then led to other initiatives like the Network for Greening the Financial System, or the Central Banks and Supervisors Network, which you continue to play a role in. So these are big architecture solutions, which of course are necessary. I'm sort of interested in teasing out your thoughts on where this architectural discussion is going and what you see as a challenge going forward. But I'd like to start with China if I can. And the reason for that is that we're in the midst of a crisis globally, a rather dramatic crisis when it comes to the economy as a result of the COVID-19 virus. And some economies, perhaps less prepared and less able to get their act together to respond to it, are going to see very severe recessions going forward. In China, we see the recovery beginning. Hopefully we won't see a new wave of virus impact, which is always the risk of these sorts of viruses. But in the meantime, the reopening of the economy is underway. We've certainly seen bond issuance go up. And we see a narrative now about the nature of recovery, and globally a narrative about the needing to consider resilience against future crises as we design our recovery going forward. So that's the overarching thing. Of course, one of the things about China recovering first is it also means that returns are appearing there a little bit earlier than in other economies. And we are thinking that we will see an inflow of funds from the more depressed European and North American economies into China in the short term. And what we're hoping is that there'll be an interest in green. And that's one of the things. So in that context, I wanted to ask you first to talk a little bit about what you see is happening in China on the Green Front. It's been enormous, but I don't know whether all our listeners understand this. Tell us where you think this green revolution, green finance revolution is up to.
Well, thank you very much, Sean, and good day, everyone. Let me probably spend just a couple of minutes on what's going on in the green finance space in China, then come back to your question on green recovery, the post-COVID-19 recovery. For most of you who know a little bit about China, I won't get into too much detail, but I would say the architecture is that we build 4 pillars for the green financial system in China. That was a work that started, I think, 5 years ago, when the central government put out a plan called Eco-Civilization Plan, which codified the concept of green financial system, and that was followed by the green finance guideline coming out of the 7 ministries. So these measures broadly fall into 4 items, or what I call 4 pillars. Number 1, taxonomy. We now have 3 sets of taxonomy: taxonomy for green loans, taxonomy for green bonds, and taxonomy for green projects. And the second pillar is the disclosure requirement. Back in 2017, the Ministry of Environment put out a requirement of mandatory environmental information reporting by companies that are heavy polluters. They defined the list of heavy polluters. And then in 2016, the Green Finance Guideline, which PBOC led in drafting, said that all listed companies will have to report environmental information on a mandatory basis by 2020. So this is forthcoming. And not only listed companies, but I recently heard that the Ministry of Environment is now leading the effort of drafting regulation that requires not only listed companies, but also all bond issuers to disclose.
Whoa, this is huge. This is
it's huge for you because you're running CBI. And that's a much bigger space because the bond issuers in terms of number is much bigger than listed companies in China. So that's a big thing. The third piece is what I call the incentives, because some green projects remain less profitable than what the private sector like to see. So they need to be incentivized a little bit in the form of, for example, central bank relending facility, which we designed in 2017. That's a mechanism through which a central bank offers cheap money to green projects through commercial bank. And also local governments, especially in the pilot regions, have offered various subsidies for interest payments, guarantees for green projects, and so on. So these have also helped to lower the funding cost for some green projects. The fourth pillar is what I call the suite of financial products, because different financial green finance projects will require different kind of financing. Some require short-term financing, some require long-term financing, some need money that's that can tolerate risks. So we need loans and bonds and private equities and VC and products that are suitable for investors that require liquidity, for example, ABS, ETF, and so on and so forth. So all these things have popped up in the past 4 or 5 years on a massive scale, especially green loans now amount to 10.6 trillion in outstanding number. And last 4 years, China has issued 1.1 trillion RMB worth of bonds. And China has set up 700 green funds.
So just for comparison purposes, the green loan market is a lot larger than the green bond market, hugely.
It's about 10 times bigger. Yeah, the green loan market is 10 times bigger than the green bond market.
Which is something people don't realize. This is it. That's important.
That's important because securitization will be a big market. If you can securitize a large part of the green loans into ABS or CLOs, then it's going to be a huge market for long-term investors such as the pension funds and insurance company.
So we already have roughly $1 trillion US ready there in the green loan market, which could then be shifted over to its securitization market. So there's opportunities right in front of us. Okay.
That is a big thing we like to push, both in China and also for cross-border transactions. Mm-hmm. That was just a short summary of what China has been doing in the green finance space. But back to your earlier question, that's more interesting at this particular moment of post COVID recovery, China, I think, is a little bit ahead of other countries by 1.5 months, I would say. And we're now talking intensively on how to make sure that this recovery, especially the fiscal stimulus package, will be as green as possible. One of the arguments I've been making is that the infrastructure projects will see its carbon footprint and environmental impact locked in for many decades at the design stage. So in the coming 1 or 2 years, when you design the project and it's not green, it's polluting, it's high carbon, you end up with a lot of bad impact on environment and climate. So it's so critical at this moment to really argue aggressively in front of policymakers and the local government policymakers in particular, because they are the designing of largest number of projects, that they have to keep all the green stuff in mind. And we have made a couple of specific recommendations on this green recovery. One is increase the proportion of green projects in the total number of projects in the fiscal package. That package is probably not as big as in the US or Europe in terms of percentage of GDP, but it's very large relative to the past. So that's a percentage of green based on the current taxonomy. And the second point is that we need to make sure the other projects, without being labeled as green, need to meet environmental and climate standards. So they don't pollute the economy, they don't generate too much carbon. And the third point is that green consumption stimulus needs to be in place. There are a lot of government money will be spent on, for example, consumer coupon for them to buy stuff. And this is the right time to encourage such coupon or voucher to be spent on, for example, electric vehicles, spend on energy efficient refrigerators, things like that, so that the consumer itself can help greening the economy. Of course, there are many other.
This would be like Germany's cash for clunkers scheme. You'd make it only relevant to buying new electric vehicles. So you try and focus the consumer incentives, is what you're saying.
Right. At least you can prioritize those items which are in the wide list of green products, and letting the consumer coupon, voucher, or subsidies to go to support these purchases.
Now, I think this is something that Europe and China have in common at the moment now. China's had a taxonomy for some time and a projects catalogue. Europe now has one, which is coming to regulatory force, and there is certainly a live discussion in Europe about using that taxonomy as the framework for green stimulus. As you know, Europe's committed to $1 trillion trillion euros, I should say, of green stimulus. So there's and I guess, Majun, there's lots of scope for us to collaborate and cooperate between the European and the Chinese sphere on these sorts of issues. Is that your thinking too?
One way to collaborate at this particular moment is that let's talk to each other, because policymakers, they like to see what the other policymakers are doing. And that's why, for example, I'm organizing conference with ADB between Chinese specialists and ADB, so we can exchange ideas between China and the international organization. I've been talking to other multinational development banks which work on other countries, so we can exchange options and ideas, on how to green the recovery process. So such conversations are very important because sometimes foreign experiences are more important than some of the local proposals.
That's the case everywhere. Overseas expertise is sometimes seen as superior, so we need to have these conversations. Just going back to China before we leave. Sorry?
We need to have a conversation like this more regularly.
Indeed, absolutely right. Just going back to China for a minute, one of the news items that was coming out, frankly, a little bit biased, was that the recovery in China was focusing on fossil fuel generations because some approvals for coal plants had gone. We had a conversation about this in the weekend, but let's just attack this issue. That there's media reports of an increase in coal going forward, but at the same time, we have an enormously different approach to what's happening in renewable energy in China. Tell us a little bit about that for our international listeners.
Well, I'm not sure whether this particular report was referring to, but China has been investing massively into renewable energy and electric vehicles. We are the largest investors in the renewable space and also in the electric vehicle space. And the commitment China has made to the international community that they were achieving the peak of carbon emission by 2030 or above, before that. And some of the cities are now planning for earlier achievement of the peak in carbon emission. So all these are tied to the energy transition process, which really means that there are more and more renewable energy as percentage of total energy installation and investments. As I know, the number of new coal-fired power projects approved by NDRC has declined drastically in the last 5 years.
Yep.
It peaked in 2015, and recent years, the number I saw has been down to like a single-digit level compared with the 2015 level. But of course, there are many anecdotal stories, depending on where it's coming from, particular region or sectors, or other markets and so on.
Yeah, so that's just something I just want to put it for international listeners on the table. It also means, given the scale of investing that's been happening in renewable energy, that the prospects for green bonds and green loans continues to grow, because that sector is still growing enormously. The other question I wanted to ask you is, what are you hearing about the 5-year plan? I'm hearing that there's going to be a significant increase in push for green finance and green measures, in line with the increase in the last 5-year plan from the previous one. Is that something that we should be watching? Is that going to be important for international listeners understanding what's going to happen in China in the next 5 years?
I don't think the 5-year plan has settled yet. I was involved in some of the discussions, and still a lot of debate on how green the next 5-year plan should be. So at least my view, and a lot of my friends' view, is that we need to be more aggressive than any of the past 5 years in terms of greening the energy system, greening the rest of the economy, and adopting more aggressive incentives for the green finance. I would say there are some encouraging signs at local government level, at least, because I'm involved in the planning of a few regional green finance roadmap in few cities and provinces. And we are now pushing in some locations to set zero emission target, meaning net zero target by 2050, as a way to derive the green finance goal. Previously, as you know, we were working on largely product-based green finance development, meaning let's develop a green loan product, green bond product, green funds, ABS, and so on and so forth. It's almost like financial sector serving itself. But this time, our idea is that let's set a target for carbon reduction, and then work backwards so we know the demand for each sector's carbon reduction. For example, how much we need to invest in clean energy, how much in clean transportation, how much invest in the green building sector, and how much in greening the manufacturing. And all these sectors will end up with a total number on green financing. And this is how we should plan the green financial system, by basically putting together a package of green loans and green bonds and green funds and so on to meet the real demand from the decarbonization process.
So there's a conceptual difference here, which I think is worth teasing out. In Europe, the starting point for this green finance market was about doing well by doing good. It rose out of risk management techniques on the investor side and ESG frameworks, if you like. Whereas in China, there's a long history, as in places like India as well, of looking at how capital can serve social purpose and working backwards for it. So we need the interaction between the two. So you start off with how you need to improve society and address challenges of society, and then look back. And I think what we're seeing now is the bringing the two things together. In Europe, we now have a very live discussion about exactly that, which is more familiar with Chinese policymakers. This is where we have to get to as a society. How do we mobilize and use capital productively to achieve that objectives, as distinct from it just being an investor-based understanding of optimizing returns? And so I think that it's a big idea for the world in this, I think, Marjun, and it's fascinating that provinces are now looking at this kind of level of targeting. I want to take you to lessons for other countries that are arising out of this, particularly the work you've been doing on Belt and Road and your thoughts about that, because I know you've done quite a lot recently with the green investment principles and so on.
Right. Back in 2018, the China Green Finance Committee and City of London led the drafting of the green investment principles for the Belt and Road. We did this in conjunction with many other organizations, such as the World Economic Forum, Policy Institute, PII, and so on. And since the publication of these principles, we began to mobilize participation of the principles. And as of now, 37 large global institutions from 14 countries and regions have adopted, namely, they have signed the principles. These included many large Chinese financial institutions and those from the UK, for example, HSBC and Standard Chartered, Deutsche Bank, UBS, and those from Hong Kong and Singapore, such as Hong Kong Exchange, DBS, and so on, plus quite many banks from developing countries, such as those from Pakistan, Emirates, Mongolia, Thailand, and so on and so forth. We're still expanding rapidly. And under the principles, we have set up 3 working groups to enhance the capacity for these organizations to make a green investment. Number 1, it's on the tools for them to measure environmental and climate impact. For example, we're now developing a carbon calculator, which will be made free to all these members. And eventually we can do this for free for everybody in the world, so that anyone who wants to make a new investment, they can use a carbon calculator to estimate how much carbon it's going to generate relative to certain benchmark. And we'll be doing this for many other pollutants as well, water and biodiversity impact and so on and so forth. That's the first working group. The second one is on disclosure. We're adopting TCFD as the framework and asking our members to gradually enhance their capacity to disclose environmental and climate-related information. For example, you need to report your strategy, your policy on green, and you need to report your green investment or green lending and their environmental benefits. And over time, you'll be asked to report the brown investments and the negative impact on the environment. Of course, most of them, are not interested in disclosing brown stuff, but we can encourage them for disclosure by saying, if you can disclose the reduction of the brown impact, that's a positive thing, right? And the final stage of disclosure is to encourage them to conduct environmental risk analysis. For example, stress testing and the scenario analysis. This is still very scarce in terms of capacity. Very few organizations are able to do that. A couple of them can do this already, so they can lead the way of reporting such results to the rest of the community, so that it will show that by doing such analysis, they are more aware of the environmental and climate risk than the others, because they can quantify. For example, we developed a model in Tsinghua University that shows if you lend to a coal-fired power project, your current non-performing loan ratio is probably 3%, but in 10 years' time, it's going to go up to 20% based on the environmental risk analysis. Right. So such analysis could be very shocking to many of the lenders, which are not aware of this risk. Once they are aware, they will change their mindset, they will shift their portfolio more quickly towards green.
This is making stranded asset risk more visible.
This is stranded assets concept that we sort of operationalize it by providing a tool. So they can just put in a few numbers and they will see in 10 years' time, what is the non-performing loan ratio. And the third working group is the what we call the product innovation group, which is really a platform for exchanging best practices among the members. And they'll be doing seminars and other training activities among each other. The fourth thing, which is not called working group, but it's a project, is that we're launching a Belt and Road Green Project Database. We're now having Refinitiv to undertake this project for us. And once the database is available, we're putting the green stuff into it. After verification, it will be made available to many lenders and investors among our membership and also probably for the rest of the financial community. This will resolve the problem of information asymmetry because some projects which are green, they're hard to find the money, and some money which is looking for green, they probably don't have the right access to the green projects.
So that's quite a big issue. This is a public good, right? That investors and so on will be able to interrogate. Is that the idea?
It is a public good.
I mean a widely available tool, a freely available tool.
Right. At least for the moment, we're not charging any membership fees, for our signatories, and we are now producing these tools, methodologies, and templates for our members. Okay. It's a public good on the sort of a membership, but in the future, we hope it'll be more public.
Okay. On the environmental impact statement, which is a very important thing to pursue, I couldn't agree more. China already domestically requires EIAs, environmental impact assessments, and so on. How would this work with Belt and Road? I mean, can you see a situation where, say, the banking regulator or NDRC or MOFCOM are requiring all Chinese company investments in Belt and Road to ensure there's an environmental impact statement? Is that something that's viable, do you think? I've lost you, Marjon. Hey, you're back. You're still on mute. That's it.
Sorry, lost you. Am I okay now?
Your audio is very faint. Need to speak up a bit.
Can you hear me now?
Yes.
Hear me okay? Good. All right.
The application to Belt and Road of environmental impact statements, how's this going to work out, do you think, or what are you thinking about the process? Because of course we all want in Europe and the US and in China for our companies to be applying these kinds of methods around the world.
Right. Domestically in China, there's a requirement for projects to go through environmental impact assessment.
Yep.
It's a regulatory requirement. But for international investments, there's no such mandatory requirement. But we think there should be some sort of mandatory requirement. That's why under the Green Belt and Road Alliance that's hosted by the Ministry of Environment, we're part of it. We began to design a system which is called the traffic light system. And that's going to be a proposal for installing such a mandatory requirement for environmental impact assessment. And hopefully we want to sort of classify different projects into different colors. Certain color, stand for green, and other colors stand for non-green, and so on. That's a project that's just starting.
Fantastic. Do you see this working for all investments, like clearly infrastructure? Can it work for real estate investments too, or agricultural investments? Is it viable?
Well, it's still a research project. My personal view is that we probably need to start with a larger project with big impact. If you cover everything, it's going to take a long time because all the technical details require work and time. In order to push it through more quickly, need to start with projects with certain scale and projects that are likely to generate a significant environmental impact.
So I want to take you a little bit back to your global work with Network for Greening the Financial System, which came out of the Green Finance Study Group and so on. You've mentioned a couple of reports coming through. I guess the key bit of work that we're all waiting for from the NGFS is a scenario analysis work that I know you've been intimately involved in. Can you give us a bit of a flavor of what that's going to look like and what people need to expect?
Sure. For those of you who are not familiar with NGFS, the official name is called the Network. Actually, it's longer. It's called Central Banks and Supervisors Network for Greening the Financial System. In short, it's NGFS. That network was set up in December 2017 by 8 countries' central bank, including the Chinese, UK, Germany, France, Netherlands, and so on. And at that time, we were not expecting it would grow into such a big organization. But right now, this is a network of more than 50 countries. And other 10 international organizations have joined as observers. So its influence is growing rapidly. We are working on 3 work streams. I am the chair of the work stream 1, which is also called supervision work stream, which this year works specifically on 2 documents. One is called Overview of Environmental Risk Analysis by Financial Institutions. And the second document is called the occasional paper on case studies of environmental risk analysis. The first document is going to represent the official view of NGFS. It will be drafted by our members, by the NGFS members, and we'll make some recommendations on how to promote the usage of environmental risk analysis tools. The second document, it's a much more technical document. It's like a book. So far, since I'm the chief editor of that, I've seen this book growing to 500 pages already.
Oh, that's like the EU taxonomy. Huge.
I guess so. We probably will exceed your volume. And we have collected 36 chapters, which are written by more than 30 organizations globally. Some are banks, asset managers, insurance company, some are universities, research institutions, NGOs, and so on, and third-party service providers. So it's, I think for the moment, the most complete collection of environmental risk analysis methodologies. And it's detailed enough for the financial sector to replicate many of the methodologies. We covered those methods for banks, asset managers, and the insurance companies. And we covered not only scenario analysis, stress testing, but also all kind of ESG integration methodologies, and also natural capital accounting methodologies, and so on and so forth. So I would encourage all of you, if you are not familiar with the subject, to look at these 2 documents, which will come out in July this year on the website of NGFS.
So I think for some of our listeners, the key point about this, or something to know about this, is that PBOC, the People's Bank of China, was a founding member, probably the first driver, I would say, of the NGFS, working now closely with Banque de France, the Bank of England, the Dutch Central Bank, and others. I think we're up to, what is it, 62 members, Marjun, central banks around the world. And there's a flow on into emerging markets and Belt and Road. So the side passage, while we're talking about what corporations and banks ought to do, there's also a significant engagement around central banks and regulators across emerging markets about how they can make their economies more sustainable to address risk. And we've seen some very interesting initiatives by people like Bank Negara in Malaysia or other countries. Now, someone just asked a question about greening the Belt and Road. I want to say that Xi Jinping has, at the last 2 Belt and Road conferences, made very strong speeches, the president of China, about the need to green the Belt and Road. And we need to understand all of these features as part of that attempt to shift it. It's not just strictly speaking of bank lending. It's also about regulatory frameworks and sharing understanding across emerging markets. And Marjun, you've been doing a lot of work in emerging markets in this area too. I mean, am I saying the right thing? Are you getting an enthusiastic and interested response with all your engagements?
There's so many things we need to do in emerging markets. Just give you a couple of examples of what we've been doing and what should be done. For example, my Tsinghua Center for Green Finance has helped Mongolia to develop its green taxonomy. And I went there a couple of times, my team went there a couple of times, and they modified many rounds by doing internal consultations with different departments, ministries, and they published end of last year by the national authority. So I think this type of work is needed in many, many more emerging market countries. So far, probably less than 5% of these countries have worked on taxonomy. Mm-hmm. And we need all of them have taxonomy, either doing your own taxonomy or adopting something that's existing, but you have to declare so that the domestic financial sector players know what to follow. That's one thing. And the second thing is really about disclosure, which is very important, and it's making progress in Europe, UK, China, Hong Kong, Singapore, but not much progress in many other emerging markets. That's needed, and probably technical assistance from other countries is also important in helping them to developing disclosure requirement, which can go along with their particular market development. For example, if one place wants to develop a green bond market, then the disclosure requirement will come with it. Taxonomy and disclosure will come as one package. That's the second thing. And the third thing is really about the incentives. Some of these emerging markets, they still see polluting projects as very profitable. Largely because the incentives are distorted. The pricing incentive, the cost of polluting whatever water, land, or air is way just too low. So these wrong pricing need to be corrected in the short term by certain policy incentives, either from the finance ministry or from a central bank or from the regulators. So all these things require some external help, but also require some leadership within the country, especially from a central bank or another credible, leading authority.
I mean, China's a laboratory for all these incentives at the moment. We've had the central bank do incentives, which you helped or develop proposals for. We've now got 5 provinces who are trialing all sorts of different incentives. I mean, from Jiangsu to Guangdong, they're quite different what they're doing. And there are others piling in as well. Do you have a view about what's proving most effective here? I'm just curious, do we know enough yet about what are the ones that really do hit home?
One very interesting incentive is in Huzhou. They put together a green project matching platform with financing. Embedded in the platform, it's interest subsidy. So let me describe to you how it works.
Okay.
The local government sponsor the setting up of a platform, which is a IT system, right? And within the system, they bring all the banks' green loan facility, and they bring all the green projects, which are qualified, certified by the local government. And within 1.5 years, they match the financing and the projects in the amount of more than 100 billion. It's a massive number in a small city.
That's amazing.
And why these projects are willing to come on? Because they offer the interest subsidy.
Right.
The local government gives subsidization of something like 30 basis points to 60 basis points for interest payments. That's why all the project owners are willing to join, and all the banks are willing to join, and the matching become much more efficient because the project owner won't need to go around many different banks and spending months and after months looking for money.
So these are substantial subsidies for the issuer or the borrower, but very fiscally efficient for the governments in the way they do it. And I think that's the lesson to be learned around the world going ahead. I've been getting a few questions appearing on the Q&A chat. One question, just while we're back in China, you mentioned the green loan pipeline, if you like, the volume of green loans, and the opportunity to turn them into asset-backed securities and CLOs. And we talked the other day about how you thought this could be a particularly of interest to international investors, and it provides transparency when people are wanting more transparency. What have we got to do to grow this? What are the steps to actually make this work?
Actually, it's durable already now,
Yep.
because China has created this Bond Connect channel through which foreigners can buy fixed income products on the China market. But there are alternatives. For example, we can create a channel for Chinese green loans to be sold to foreign markets, and then package the foreign loans, let's say in Hong Kong or in London or Singapore, into ABS, then sold to global investors. So all these are possible channels But the couple of things that's needed. One is we need to make sure that the foreign investors understand these products.
Mm-hmm.
So rating and certification will be very important. We need credible rating agencies on credit rating, and we need credible, certifiers on greenness. And the other thing is letting them know that the yields are attractive, especially right now. Many of the European interest rates are close to negative or negative.
Unbelievably low.
Right. And China can still offer you, I guess, at least 3 percentage points higher in terms of yield on quality green projects. So we need a more understanding of this arbitrage opportunity, and we need more verification transparency to make it work.
So that's one of the things that, of course, we've worked with you on in the past, and we see a lot of developments around that in terms of it. Do you see actual people offering? We saw the landmark CLO from Bank of China some years ago to show what could be done, which was very successful placement and so on. Do you see other people coming forward at the moment, and especially as we start coming out of the crisis and green bond issuance is growing again in China?
I think this needs to be organized because it's not so straightforward.
Okay.
For the Chinese issuers, it's tapping into a new market, and they need to overcome a couple of hurdles, which we need to build a bridge for them. International platforms such as the China-UK Green Finance Task Force, and we also had a China-France joint Green Finance Conference. These kind of mechanisms which can help facilitate transactions for cross-border green asset trade.
In another area, you've called many times for green banks to be created and so on. We've got a lot of green funds in China already. I mean, it's an extraordinary number. Perhaps you can tell the listeners how many we have. What do you see this tension between more green funds and the need for a green bank versus reforming existing institutions as Europe's tried to do with the EIB? How's this going to play out? Are banks critical at this stage?
Funds are relatively easy.
Yep.
Yeah. Now, the reason that we have 700 green funds, it's because it's relatively easy to register fund. You mobilize, 1 billion and you register fund. But for banks, it's very difficult to get a new license. Every year, the authority only give out, couple of them, and sometimes zero. That's why there's a very fierce competition for new bank license. Of course, it's not saying there's no need. I think personally, we will need new green banks in China because the green banking requires a lot of specialty, which is not necessarily available in ordinary commercial banks. And when you concentrate these resources in one place, then the cost of operating green banking business will actually go down. So specialization is needed to make sure that the green banking make good money at the same time delivering environmental benefits.
So there's work to be done. But you said 700 green funds, right?
Yes.
This is an incredible growth in the last few years. And do you cover? Right. Are they covering all types? I mean, do we see private equity green funds or VC green funds as well?
These are the numbers coming out of the database hosted by the Fund Association under CSRC. So it's officially registered funds with a name like a green or environmental or something like that. There might be other green funds which is not labeled as green. These are not counted for as part of the 700. So indeed, it's growing very rapidly, few hundred more every year in the green fund space.
This is, of course, another potential investment opportunity for international investors to participate in green fund development, which there are a few coming.
Yeah, relatively speaking, China, the green financial system is more developed on the debt side, meaning loans and bonds. Mm-hmm. The funds are still relatively new. And we, as a country, have a problem of very high leveraging ratio, which itself may translate into financial risks. So we are very keen to develop more equity financing channels. And the funds, especially PE and VC funds, are very important part of this more balanced financial structure for green finance. And indeed, the foreigners are welcome to participate in the green fund industry and there's no barriers for now. Foreigners can already set up its wholly owned or joint venture green funds in China.
So there's been some symbolic moves in capital markets recently with PBOC cancelling the QFII scheme and so on, although I appreciate that's already been changing anyway behind, not fully utilised. But we see some understanding of the symbolism to say we are open to investment. And I think it's fair to say there's a particular keenness on green investment going forward, given the scale of what's got to be done in China to address environmental challenges, which you've written about, right?
Right. What you mentioned was the announcement that the quota on QFII limits were lifted,
yes,
which means that QFII investors can come in and go at will, which is symbolic to this capital account system. And it has to do with the increased flexibility of exchange rate. If you remember, last few years, we had more volatility in RMB to US dollar exchange rate. And more volatility after a while, it become flexibility, meaning more market players are used to the volatility. Right. And that volatility allows the central bank not to intervene. Right? Their acceptance of volatility allows central bank not to intervene too much. And therefore, the willingness for the central bank to gradually open the capital account will increase when the market began to accept more exchange rate volatility. So after this recent move of lifting the quota, I think there'll be more actions on further liberalization of capital account, which is good for green capital flows.
Which is great news. How about domestic Chinese investors? I mean, we've seen the green bond market grow on the back of incentives, particularly incentives for commercial banks to hold green loans in their green bonds in their portfolio. In terms of the insurance sector or the pension fund sector and so on, where do you see that sector is up in terms of engagement on green finance? Do you see a lot of shift in terms of portfolios towards green, or are we at the early stages of that journey? What's your reading?
Insurance is divided into the asset side and liability side. Yeah. On the asset side, there's some green investing, but more on the liability side, we have seen progress. For example, PICC has been a pioneer on developing green insurance products. They have been a leader on environmental liability. It's called environmental liability related insurance products, and also they developed innovative products on green building, which is very important because green buildings, when it's offered by developers, sometimes they are not trusted by the buyers.
Yep.
And they will ask whether the promised reduction of electricity bill can be materialized, right? And if they're not sure, they won't pay the money, additional 5–10% to buy the apartment. And that's where the insurance company can help. Insurance companies say, I'm the expert, and I guarantee their promised energy consumption reduction will materialize, otherwise I'm not gonna pay you. So with a small premium buying this insurance, the developers can sell green buildings or green building apartments much more quickly. So these are the innovation which is now taking place in China, the insurance sector.
That's fantastic. So there's movement across all sectors. I know we need to start wrapping up now. I want to take us back to the bigger picture. We're in this crisis. We have to look at a recovery from the COVID. I think you said to me the other day, we only get one of these opportunities every few decades, and possibly longer, to make real change. So we've seen some odd changes, counterproductive in a way, the collapse of oil prices, which some people are worried about will make renewables less attractive in the short term, or at least EVs and so on. I'm not so sure. But whatever, there's a lot of chaos, a lot of change happening. How do we make the most of this in the next 6 months, of this particular opportunity to rethink our societies? You said a few things, but advise the listeners around the world.
Right. The reason I said this is a once every few decades opportunity is because the magnitude of the stimulus package is so big. For example, 20% of GDP in the US, 20% of GDP in Germany, and maybe 5% in China, and such huge amount of fiscal money to be spent in a relatively short period of time is an opportunity for us to green the economy in a very significant way. That's why I think all the green advocates at this particular moment need to speak up to their governments and to the central banks, to the finance ministries, to the international organizations, that they need to take into account the green impact as much as possible in designing these packages. And some of the international platforms are now working on joint proposals and statements. I think it's a very good effort, and we need more of these international platforms to voice their views at this critical moment.
This is our opportunity to actually get influence on the forward agenda, reshape our planet so it's sustainable in this particular moment. We need to let you go because I know you have another call coming up in literally a few more minutes.
Yes.
But thank you for joining us today. Thank you for that rallying call at the end. I think you're right.
Thank you, Charles. Thank you, everyone.
We need to have more conversations like this between key actors in different markets, because there is so much in common between what people are trying to do in Europe, in the US, in Mexico, in South Africa, and in China, and so much to learn from each other. And I think that's one of the great things about the conversation you and I had over the years, the ability to be able to take what's working in one sector to another. I'm looking forward to a report sometime soon of all the incentives that have been applied in China and an understanding of what works best, because I think every country in the world needs to read that to understand the transition. But in the meantime, thank you for joining us today. Best wishes with your grand agenda. Marjun is the only way to put it. And for the work you're doing all around the world, and especially in the short term, best wishes for helping us all navigate this recovery so we can make sure it's a sustainable recovery.
Thank you. Thank you all.
Thanks everyone for joining us today. For those of you that are still online, you can see on the screen now, if you want to get the recording of this webinar, which will also be available on podcast, the recording will be available on YouTube and Youku in China. www.climatebonds.net/webinars will give you the connection details. Please tune in to more webinars in coming weeks on topics from the EU taxonomy to ideas for a sustainable future. Thank you for all those people who have asked questions. I will attempt to respond to as many of those questions as possible by email. So we will get to them and we'll get Marjun's help. Not all of them will be able to respond to, but we'll give it a shot. Again, thank you very much for joining us today. And thank you, most importantly, for your interest in how we create the sustainable future for our children that we need to have. Thank you again.